Good morning. It's 10 o'clock on a Thursday. This is Steve Barger, and we'll get into it in just a minute, but I wanted to just start out with something a little bit on the lighter side this morning. So a loan officer dies, goes to heaven. He's met at the pearly gates by St. Peter, and St. Peter takes a look at what he's done in his life. He said, "You've helped a lot of people being a loan officer, done a lot of good, getting people into homes, affordable financing. But back in those days when we had stated income, you stretch the truth a little bit, so that's not good. I'm not exactly sure if you should be going to heaven or hell. We're going to let you decide. We're going to give you a tour of both and let you decide." So he takes him to heaven first, shows him the streets of gold, the mansions, and basically the only thing that was annoying to this loan officer in heaven was the harp music that was playing in the background. He said that could be annoying for eternity. So St. Peter then takes him to hell and lets him see inside there, and surprisingly, hell has golf courses, has a pool, has people looking like they're having a lot of fun, dancing and partying. Loan officer looks at St. Peter and says, "Wow, this is a hard decision. Can I think about it? Do you mind if I go ahead and sleep on it? I'll let you know tomorrow my decision as to where I want to go and spend eternity." St. Peter says, "That's fine. You can go ahead and do that." And so the next day, the loan officer says, "You know what? I made my decision. St. Peter, please allow me to go to hell. I think I'll fit in better there." So St. Peter opens the doors to hell, and the loan officer immediately encounters fire, brimstone, all the gnashing of teeth, and the anguish that the Bible basically says that hell will be like. And he says, "This is crazy. This is not what I expected. This is not what you showed me yesterday." And St. Peter looks at him and says, "It's a pity you didn't lock it in yesterday." Anyways, so today I want to talk about the difference in conforming and FHA loans. Just a little bit of insight as to which one might be better for you. If you're looking at FHA loans, it's kind of cool in that you can put 3.5% down typically. The credit guidelines are a little looser. Minimum credit scores can be 580 and still get an FHA loan. Conforming loans, you need typically 5% or more down. 620 credit score is the minimum that I know of for a conforming loan on a consistent basis. And the good thing about a conforming loan is that you can put 20% down, and with the 20% down, you can avoid mortgage insurance. On an FHA loan, if you put down 20%, you're still going to pay mortgage insurance, and it will never go away until you refinance out of that FHA loan. So the conforming loan is good in that by putting at least 20% down, you don't have to pay mortgage insurance. Your interest rate may be a little bit higher on a conforming loan. And when I say conforming, it's the same thing as conventional. Conforming, conventional are interchangeable. They're basically Fannie Mae and Freddie Mac type loans. But the key there is if you're able to put 20% down, you will definitely have a better monthly payment, and that you're not paying the mortgage insurance that you will always pay on an FHA loan. So FHA loans, the guidelines are less strict. As far as credit guidelines, you can have a couple blimps and you can still get into that FHA loan, have a little bit lower credit score, less down payment, but you'll always have a mortgage insurance payment that'll never go away. So those are a couple things to look at and to weigh as far as your decision. Do I want a conforming loan or do I want an FHA loan? Looser credit guidelines maybe on an FHA than a conforming, but definitely the ability to get away from the mortgage insurance if you're putting at least 20% down on a conforming loan. The one thing that I do want to mention on an FHA loan is that typically the rates are a little bit lower, so that can help offset the fact that you're always going to have a mortgage insurance payment on an FHA loan. The fact that you can get into a slightly better interest rate, sometimes it's as much as 0.5% or more, better on the FHA side than it is on the conforming loan. So again, 580 and up for FHA, 3.5% down. On conforming, you need at least 5% down, but 20% is your sweet spot where you're going to get a much better deal by not having to have mortgage insurance on that loan. You do need the 620 credit score, though, for the conforming loan. Anyways, have a great day. Happy Thursday, everyone. Let's finish the week strong. Bye.